Good afternoon, everyone. Thanks for joining us at this webinar about being prepared for the unexpected with proper financial planning. Adrian Lee, our Senior Fintech Insurance Specialist at FSM1, will now share with you an overview of critical illness insurance, highlighting the different types available, its benefits and functions, as well as how it fits into your financial planning. I'll now pass the time to Adrian.
Okay, hi everyone. A very good afternoon. This is Adrian from iFast Insurance team. Okay, so basically today in FSM1 webinar, we'll be talking about protection against the unexpected. Basically, it's all about critical illness insurance. Let me walk you through. Okay, so in today's workshop, basically we are looking at what is CI insurance, benefit of CI insurance, and the types of it, as well as the considerations. So let's have a quick glance through what is actually CI insurance. Basically, CI insurance pays a lump sum if the insured is diagnosed with a CI covered by the policy. So the Life Insurance Association Singapore has actually came up with a standard definition of 37 severe stage CI. But just to take note that there will be changes to CI definition in this year, August. Okay, so you may refer to the website. There will be an upcoming version for the standard definition for 37 severe stage CI. So basically, some of the terms will become more specific, and in the website, right, they have actually attached the summary of it. You can have a look. So just a bit of facts. Did you know that the number one deadliest disease in Singapore is actually cancer? Basically, from my own experience, I have heard people around me, telling me that they have encountered these diseases among their family members, or heard from their relatives. So this is actually quite common. Even though for my client, I actually have some client encountered this disease. So just to let you take a look, these are the principal causes of death. Actually, the source is from MOH. As you can see, the first one would be cancer, second one is pneumonia, and the third one will be heart disease, and the fourth one is the also quite common one, which is stroke. So basically, these statistics actually tells us that cancer cases have been rising over the years. So the scary part is 1 in every 4 to 5 people in Singapore may develop cancer in their lifetime. But as you can see, the proportion in between men and women is quite equal, but women would have a slightly higher chance, as shown in this statistic. Okay. A bit more facts. Did you know that about 39 people are diagnosed with cancer every day in Singapore? So about 15 people die of cancer every day. And 1 in 4 people may develop cancer in their lifetime, which is really a bit concerning. Yeah, because looking around the people that we have actually do daily, we also, like I mentioned, I always heard from some of them that this incident could occur. Be it their family member or their friends. So I personally also experienced that with some of the relatives. They actually encountered this kind of issue and disease. So I always think that prevention or protection is always better than, when something happens, then we try to solve it. Whether be it you have a good insurance plan in place, or financially prepare for all this, because medical costs nowadays is actually very high. And also, as you all know, the medical inflation generally is hovering around 10 to 15% a year. Just a bit of a side note. Okay, and also for male, colorectal, lung, and prostate cancer are the 3 leading cancer diagnosed in male. While for female, it would be breast, colorectal, and lung cancers. And did you know that actually Singapore's 4th leading cause of death is stroke? And 1 in 6 people will have a stroke in their lifetime. This is a 1 in 6 people chance. So it's considered quite high, I would say. And the more concerning part is about 35% of the stroke survivors become dependent in their activities of daily livings. So what is ADL? We call it ADL. Let me show you. So if let's say today I have encountered, touch wood, if I encounter with a stroke and lead to a dependent state, I couldn't feed myself, I couldn't bathe myself, dressing, transferring, toileting, or even walking or moving around. All these require support from the others. Okay, let me pose this question to you. What if one day you discover that you're in an unfortunate situation like let's say diagnosed with a CI. For example, if I had a cancer, what would be my financial concerns? Okay, so basically the cost of treatment. If let's say it does cover under your hospital plan, that's good. But what if the additional cost that is actually not covered under the plan? Then about loss of income, because we need to focus on recovery. We might not be able to work. Okay, typical severe stage CI would take about, let's say, if able to actually recover, it will take about 3 to 5 years. Okay, for the recovery. So during this time, very likely that we are unable to work, and we need to adapt to a new lifestyle, a more basic kind of lifestyle instead of your current luxury kind of lifestyle, or you want to actually have more hobbies, spend more money on vacation, all this. It will change. Yeah, and also the unavoidable family expenses if you have a family, the liabilities like your mortgage, your car loans and stuff, and children education. Okay, all this would still go on. Yeah, but uh, with that in place, we still need to actually focus on treatment and stuff, and this is very burdensome. Yeah, and also mentally very stressful. And other healthcare require like a helper, private nurse, or even extra medical equipment. So I always ask this question to myself, or some client, and also some of my friends. What is your backup plan? Okay, I always ask them, if let's say today we need an emergency assistance, for example, 50,000 to cover some of the costs that we are not able to cover out of our financial means because we have exhausted all the source we have. Let's say I want to name 5 people that actually contact 5 people that can actually borrow me 10K each person. So basically, everyone will have their different life stage and also different difficulties during certain time. So they might not be able to help you at that point of time. And sometimes it's very hard to ask for help also, or borrow money from, from even though to your close, with your close one or your friends. So what is our backup plan if we do not have any insurance coverage? We will actually tap into savings, okay, assets, and assistance from family, relatives, and also potentially go into borrowing. So again, we need to ask ourselves, when things get critical, how healthy is our plan? So we can do so by reviewing our existing insurance policies. And I get this question a lot also from my client or my friends. They will tell me, actually, additional coverage, is it actually required? Additional medical insurance is not necessary because I have already covered by MediShield Life. I am already covered by my employer benefits. But are all these true? Again, regarding the employer's benefit, I would like to pose this question. What happens if I retire? What happens if I'm retrenched? What if HR decides to downgrade employees' policies? And what if company is going to cut costs on employee benefits? Yeah, because we understand that from last time era, really, there are some seniors that can really work for one company for their whole life, and even though work beyond their retirement age. But right now, let's think about it. What if after we are retired, we are not covered by any insurance? And also, what if in between job changing or change of company, we need to actually protect against this type of gaps. So because when we are not the employee of the company, we actually rely on our own. We cannot actually utilize the employer's benefit. So because right now to have a proper insurance policies in place, it also gives us an option to receive a better medical medical treatment. It increased survival rate from illnesses due to medical advancement, better healthcare facilities, better medication. All these contributed to the increased survival rate, and also the better treatment options. And early detection of illnesses are actually possible because right now we are more health conscious. We do have some employee benefit. That company might compliment you certain health checkup every year, or we actually do self-initiate to actually do checkup. And right now, because of the advancement on the test kit, the method that they use during the health checkup, it potentially could actually detect the illness in the earlier stage. So you can have a choice. If let's say today we do have, let's talk about hospital plan first. If we do have a good hospitalization plan, we enhance it with a private integrated shield plan instead of just relying on the Medishield plan. We can have a choice whether it's a private hospital coverage or government hospital coverage, and with higher limits, because you know that Medishield Life does have a lot of limits in place and only for certain wards. Okay, and also one of the key consideration is long wait at public hospital is actually driving a lot of the patient go to private, because sometimes we do not have a choice. If it's an urgent case and let's say public hospitals do not have the slots for this patient, then he has to actually utilize whatever available means, which is a private hospital. So as you can see, this would be the difference in between the private hospital facility and also the public hospital facility. I mean, no issue if we were to opt to go for public hospital, but I think the issue is we want to have an option, and also we want to have choices so that we can actually evaluate which one is works best for us before we decide on certain decision when we are going to hospitalize. Touch wood. Yeah. Okay, that would be the first line of defense, our hospital plan. Okay, right now, let's look into critical illness insurance. What are the benefits? Let me walk you through. So just a bit of facts. Singaporean lacks 80% of CI protection needs, according to LIA. Basically, if let's say you would need 5 years of income replacement, let's say during a recovery state, but most of the people will only be able to cover their expenses for 1 year as a result of loss of income. So there will be a gap. And to have a better coverage, also, as you can see now, because of the treatment options, there are a variety of treatment options, more in Singapore getting cancer, but survival rate also up. Okay, just a bit of explanation on the benefits. So the lump sum payout from the policy actually can be used to cover expenses such as diagnostic costs and medical expenses, which your hospital plan does not cover. Okay, for example, certain drugs are not covered, certain medical equipment is not covered under the policy, or certain method of treatment that is not covered under the hospital plan. All this, if we have a payout from our insurance policy, let's say we are eligible under the CI definition, under the policy, we can get a payout and then we'll cover all these costs if the sum assured is actually adequate. Okay, and a peace of mind when unable to work and loss of income. And also we can focus on treatment and recovery. This is very important because we are already in a very stress mindset that we need to deal with diseases. But at the same time, if we still need to worry about our financial situation, then it will be, double damage. And also less stress for family. Definitely there will be stress among the family members because they are actually worried about us regarding our recovery and also our health, but at least we don't burden them on the financial part. Yeah. So this is the more complicated part, which is the types of critical illness insurance. I've received a lot of questions on this, whereby I'm actually looking for CI insurance. Let's say one of the client told me. Then he was mentioning, but I'm not sure whether this is suitable for me. Do I go for the most affordable one, or do I go for the most comprehensive one? Actually, let me brief you. This is actually coincide. When you want to have a more comprehensive plan, better feature, definitely the premium will not be as affordable as a very straightforward kind of plan. But again, we are looking at protection angle. The better the protection for you and suitable for you, as so long the budget is actually fits your financial situation, I think you can consider that. One thing that we should avoid doing is always go for the cheapest, because sometimes cheapest doesn't mean suitable for you. So we have to always go through a review first before we decide on anything. Okay, I've break it down to 4 general types. So the first type, what is term insurance? Whole life insurance. Actually, both of this, you can embed a CI coverage into a term insurance or into a whole life insurance to make it more comprehensive. Okay, and also the third one will be a standalone comprehensive CI plan. It has 2 types, with or without multi-claim feature. And the fourth one will be the straightforward cancer plan. It does cover only for cancer. So what are the key differences? So the first one, let's look at term insurance. The advantages, right now, some of the term plan, you can actually embed a CI or even early CI rider into the main plan. So usually, early CI rider does cover from early to advanced stage kind of CI, okay? And then it is more affordable. And you can actually have options for coverage period. For example, I want to opt for 20 years, 30 years, up to age 65. Maximum can go up to age 85. So it's quite flexible. It's really according to your needs and also plan out, and you can select the coverage period accordingly. But the downside is it has no cash value. Very straightforward. Only pay for the protection. There is no cash value. I've also shown an illustration here. Okay, for example, this Mr. 35 years old, male, non-smoker. He's actually looking for 300,000 sum assured. Okay, this is the basic plan premium. Then followed by the TBD rider that is embedded inside already. Okay, then he add on an early critical illness accelerator rider into it. So the total premium will be this. But as you can see, the basic plan is actually very affordable, whereby it does only cover death, TI, and TBD with the TBD rider embedded into it. Then you can actually add on a CI or ECI rider. If, let's say, for some client, ECI rider is not required because they have done their review, everything. They just need a normal CI rider, which only covers severe stage CI. Then it will bring down the cost definitely if you only add on a CI rider instead of an early CI rider, because the coverage is not as comprehensive as early CI rider. So let's look at whole life insurance. What are the advantages? Basically, right now, the whole life plan currently available in the market is quite different from last time. Last time is very generic. You don't have a lot of flexibility and also rider to add on. But right now, as you can see, some whole life insurance, you can actually add on the multiplier into it, so that the sum assured, basic sum assured can be multiplied up to 65 or 70 years old. Then the CI or early CI rider can be embedded into the main plan as well. And it comes with cash value. Of course, when we talk about whole life plan, definitely the upfront yearly premium will be more expensive than the term plan. But the good thing is you can choose your limited premium term, which means that instead of paying for whole life, I can choose to have 10 years, 15 years, or 20 years of premium payment term. Disadvantages, one of it is actually more expensive. Let me show you the illustration. Okay, same profile. If you are looking at the coverage, basic coverage, this client set at 100,000. okay, according to this quotation. Then we will then add on a 3 times multiplier. So as you can see, the coverage becomes 300,000 until age 70. Okay, then he then add on an early CI rider onto it. Also, after multiplier, it will be 300,000 up to age 70. So after 70, age 70, right, it will drop back to the basic sum insured. Okay, so by doing that, he's actually paying this premium. It's actually more expensive than a term plan. However, he only opt for a premium term for 15 years. So if he actually shortened the premium term to 10 years, the premium will also goes up. Also, it actually correlated. Okay, so but according to this 15 years, this would be the premium. But at least he will know that this is what he require. He wants to pay off the premium in 15 years while he's still in his peak of the career. So, but for this type of whole life plan, if you are looking at very high sum assured in the first place, then it will not be very economical because the upfront yearly premium will be very high, unless it is actually suitable for your budget and also it fits your financial situation, then you can consider it. But usually, most of the clients that actually looking for it is more on the CI coverage that can add on to it and the limited premium term. Okay, the third one will be the standalone comprehensive CI insurance. Basically, it's a term plan, just that it focuses on CI only. Okay, very minimal coverage on the death benefit or on the death benefit, very minimal. It only focuses on the CI coverage. It does cover from early to advanced stage CI, and there will be option for a multi-claim feature like I mentioned just now. And also, the 100% claim on early critical illness has certain limits. So both the rider or the standalone plan, there is certain limit on early CI claim. Let's say today there's a claim on this early CI that is covered under this policy. Usually they will set a cap at around 250K or 350K. Yeah, it depends on the insurers and the types of the policy. So must bear this in mind if let's say you are going through certain quotation or you are looking at certain options. Do check out all this, because if let's say today you after review you wanted to implement a 500,000 sum assured CI plan on early CI, for example, but if you found out that it's actually the early CI claim limit capped at 250K each claim but do remember that you cannot claim for the same disease usually. If there is a balance of the limit, you have to claim it. There will be a different disease occurs, then only which is covered under this policy, then only we can claim for the remaining. So this is just some additional information, but just bring back to this point. So what do you mean by each early CI claim limit capped at 250? For example, if let's say for first claim, I want to claim for 250,000, but actually my sum assured is 500K. So the balance, right, will be available for your claim actually for the next, or touch wood, another kind of critical illness cover under this policy. So it couldn't be the same disease. So it will bring up a question whether should you implement a 500,000 early CI coverage in the first place. So the disadvantages are more expensive, no cash value. The two types which are basic coverage and multi-claim feature. Let me walk you through. So this is the basic type, as you can see. Okay, it has no multi-claim feature, very straightforward. This is the sum assured coverage term, 40 years. This is the premium. While the other type with multi-claim feature, how it works is, okay, for example, this insurer does cover this type of insurance with a multi-claim feature. But let's say today, if I claim the sum insured one time, okay, let's say my sum assured is 100,000. after the first early CI occurs, I claim the first 100,000. Okay. Usually, the normal policy will cease, right? But for this one, because they have a multi-claim feature, after 12 months, it will reset to 100% sum assured again. So in the future, if I encounter with another CI cover under this policy, I can claim under the sum assured again. So this is how it works. And also for this type of multi-claim insurance, usually some insurer will place it with a different kind of structure. Some is in a grouping type. What do you mean by grouping type? Is they group the CI in different groups, and also they are doing tiering on the claiming. So it has different features. So do find out which one suits you best. Yeah. The fourth one would be cancer plan. So basically, it's very straightforward. For example, the premium is very affordable. Okay, the application is simplified, and it does cover for cancer for early stage and advanced stage cancer. So the disadvantages are premium rates are age banded. That means it will go up according to your age. Then capping for max sum assured. This one also do look out for the information when looking at this kind of plan, because usually they would have a cap. For example, if I were to get 300,000 for a cancer plan, usually for this for certain insurer, they will have capped it at 150K max or 200K. Okay, and there might be progressive payout kind of feature. For example, instead of paying 100% on the sum assured, they will do a 50% for early cancer claim. Then another 50% is for the advanced cancer claim. So it's not like you buy, yeah, if let's say you are getting 150K sum assured, if touch wood, your first claim you want to claim for a cancer cover under this policy, they will only pay you 50% for early cancer. Then the remaining will be applicable for advanced cancer. So, but some of the insurer also implemented a 100% payout. So do take note on this kind of, I would say T and C lah. Yep. And also it has no cash value. So again, what are the concerns on CI? When it comes to getting a CI coverage, actually AIA has done a survey which is published by Straits Times. Actually, it's done on 300 Singaporeans aged 30 to 55 with monthly household income of 5,000 and above, and another 100 Singaporeans who are recovering or have recovered from CI were also surveyed. So the first one, the survey result on concern on critical illness. Most of them, 95% of them, are worried about the financial impact on their family if, let's say, they are diagnosed with CI. Okay, and critical illness coverage amount is actually quite insufficient because among them, right, they only have about 150K kind of CI coverage. But if we are looking at the loss of income of 3.5 years, while you require for treatment to actually get to a recovery stage, they actually can only cover 1.5 years of their loss of income. So you can see that there is a gap in between. And among those diagnosed with a CI, right, 41% intend to purchase another CI plan, but 94% find it difficult to do so. Just to share with you a real case scenario from my client, that he is actually a cancer survivor. So previously, right, he was trying to apply with a few advisors or through a few insurers, but it got rejected because of the medical history he has. So basically, I take extra step to help him to try again with some of the insurers, but in the end, it was still rejected. Yeah, because these are the concerns that when underwriter in the insurers will look into an application, whereby you have whether have a pre-existing condition, whether you have certain reports, regarding to the pre-existing condition or CI that you had encountered previously, touch wood. And all these, right, will be a consideration when it comes to whether they want to cover this insured or not. So my advice is, while we are healthy, while we are young, healthy, or do not have any pre-existing condition, or even though we are actually able to afford insurance, please do check it out and also review whether we should get certain insurance in place or not, especially about CI insurance, because the cost of treatment and also the loss of income is really giving us a huge impact if we are in that kind of situation. Yeah. Okay. So let's look into the another facts, which is 97% are actually worried that they may be diagnosed with another CI. This is why certain people with pre-X condition, they are worried and started to actually looking for insurance, but finding hard to do so because they feel the importance of insurance. Yeah. Previously, when let's say when they are healthy, they might not think so much, or they might think that their existing coverage is actually enough, but they might not know that actually the insurance portfolio they have implemented was like years ago. It might be outdated. It might not be able to cover their current life stage anymore, or have adequate coverage to cover their current life stage. So a review is very important. Do really do a periodic review. If you do not know what you have purchased, let's say you have a lot of insurance policies, do list it out. If you do not actually understand the term or you forgot about the term, just speak to us. Okay, we will be able to help you with that. Okay, and also 32% of them, right, have actually been diagnosed with more than one critical illness. So again, just to wrap up, most of the considerations when it comes to insurance planning, okay, we always review our existing insurance policies, okay, especially list down the types of the coverage and what are the coverage amount. Because I do have clients that have a lot of policies, but most of them are endowments or children education kind of policy, not so much on protection. And to get a protection plan at a very old age, it costs a lot. So do do our own due diligence. We do our own financial health check on our insurance policy, and we need to act quickly if let's say we found a gap in between. Yeah, because insurer will only insure will always want to insure a healthy person. Okay, this is very true. And of course, there might be chances for those who have pre-existing condition to be covered by the insurer. But again, it will subject to loading. Loading means paying extra premium, or exclusion. Exclusion means certain terms they will not be covering. They will exclude the terms out. So all these things we have to consider. And then the current medical condition and family medical history, as well as the financial situation and budget. This is also very important. We do not want insurance to burden us. So do choose the most suitable one. Do not go for something that we cannot afford. We can implement it stage by stage while we are getting getting better and better. In our life stage, progress along the way. We can always review and add on. So again, have you had your financial health check done lately? If you haven't, we can help. FSM1 Insurance can help. They're actually quite transparent, and implement an insurance policy to us would give you some cost savings. Let me share with you. So for our FSM1 client, we will actually rebate at least 30% of the total commission that we receive from the insurer for up to maximum of 6 years for the eligible insurance policy, okay, where the premium are paid for in cash mode. So just to let you all know, Shield Plan, Elder Shield Plan, any other policy purchasing using MediSave, SRS are excluded, okay, and general insurance or online purchase insurance are also excluded. So basically, it's more for life insurance kind, and also those are paid in cash mode. Okay, of course, the structure, like for up to maximum 6 years, how does it work? We will explain to you when you have actually put in your inquiries. Okay, but let me just brief you through. So basically, it will, as you all know, different insurance policy do have different premium term, policy term, and it will affect the rate also. So we will need to look into individual policy and the schedule of it. Then we can determine, okay, whether what is the commission rate. But no matter what, there will be a 30% rebate of the total commission received, okay, for up to a maximum of 6 years. Okay. We also offer unbiased advice because we are working with 4 life insurers, Tokio Marine, Manulife, NTUC, and Ethica. Okay, we compare and also find the most suitable solution for you. And basically, most importantly, we adopt need-based approach. So we only work with what you actually need. Okay, that's all for today's presentation. If you want to find out more, please do contact us via this inquiry form, or email us. Or if you have, let's say, investment inquiry, you can also put in. Then that will be all for this session. Thank you all for joining. Okay, please stay safe during this period, and also we hope to see you soon. Okay, thank you. Have a nice day.